Welcome back to MarketSnap's Daily Market Rundown. Today was a session of sharp contrasts, with one name plunging nearly 20%, while the broader indexes sent mixed signals. We're unpacking the big movers first, then diving into the session's bigger themes that could shape your portfolio strategy. It was a tale of two markets on Thursday. The Dow opened higher, flirting with another record, but the tech-heavy Nasdaq struggled under the weight of a sell-off in chip and software stocks. The S&P 500 ended the day slightly lower, while the Dow closed down about 0.8%. The real story wasn't the indexes, though. It was the violent rotation happening beneath the surface. Let's get the numbers out of the way. The Dow slipped 0.85% to 53,885, pulling back from its record high. The S&P 500 was down a modest 0.18% to 7,709, while the Nasdaq managed to close nearly flat, down just 0.06% at 26,348. The Russell 2000 gave back 0.58%. Interestingly, the VIX dropped over 4% to 15.15, suggesting that despite the mixed tape, fear is actually receding. The big story today was the pain in software and memory stocks. AppLovin absolutely cratered, plunging nearly 20% after its revenue and outlook disappointed. Datadog wasn't far behind, down 19% after its earnings. Western Digital fell 13%, and SanDisk dropped nearly 7%, even after delivering blowout quarters. That's the kind of sell-the-news reaction that tells you how crowded these trades have become. But while tech was bleeding, the market's winners told a different story. SpaceX shares jumped 6% on the day, despite the expiration of its first major lockup period. ARM Holdings gained 4.4%, and Parker-Hannifin surged over 7% after a strong earnings beat. Motorola Solutions added 8%, and insurers like Allstate and MetLife were both up around 4%. It was a classic rotation out of high multiple growth and into value and industrials. The S&P 500 is sitting at a critical juncture. After a massive 6% surge over the past 5 sessions, the index is now hovering just below its all-time high of 7,793. Some strategists are calling for a pullback, pointing to a rare Bollinger Band signal on the Dow that suggests the rally may be overextended. But here's the thing. The market has been climbing a wall of worry all year, and the momentum is still firmly to the upside. The Nasdaq's recent rally has been nothing short of extraordinary. In just 4 days, the tech benchmark added a staggering $3.5 trillion in market cap, its sharpest rally since April 2025. But today's action shows the AI trade is getting selective. Investors are no longer buying everything with a chip in it. They're rewarding companies with clear earnings visibility and punishing those with even a hint of weakness. Let's talk about the mega caps. Microsoft was a standout, up 2.5% and continuing its impressive 26% monthly gain. Nvidia was essentially flat, while Apple edged up 0.45%. AT&T gained 2.8%, and Uber added 3.4%. But the real action was in the mid-caps and smaller names, where the moves were far more dramatic. We're in the thick of earnings season, and today's results were a mixed bag. Shopify surged after a strong beat, while Uber dropped over 5% despite solid numbers. Honeywell Aerospace sank 20% after cutting guidance, a stark reminder that even good companies can disappoint in this environment. Looking ahead, we've got a busy week with results from Constellation Energy, Wheaton Precious Metals, and Warner Bros. Discovery still on tap. You can find exclusive earnings transcript summaries on MarketSnap. Zooming out to the weekly time frame, the momentum is clearly in AI-adjacent names. Palantir is up nearly 30% for the week, Shopify has gained 19%, and Coherent is up 19%. Axon Enterprise added 17%, and CoreWeave is up 16.7%. Gold miners are also having a moment. AngloGold Ashanti and Agnico Eagle are both up over 12% as bullion hits 7-week highs. On the flip side, the weekly losers list reads like a who's who of crowded trades. RB Global is down 12.7%, Sterling Infrastructure lost 12.2%, and NRG Energy fell 11.6% after a disappointing quarter. ON Semiconductor dropped 11%, and Monolithic Power Systems is down over 10%. Even Chipotle is off 9% this week, weighed down by concerns about a jalapeno-related illness outbreak. Sector-wise, the rotation is clear. Basic Materials is the week's winner, up 7.5%, followed by Technology at 4.5% and Industrials at 4.2%. Healthcare and Consumer Cyclical are also in the green. This is a market that's broadening out beyond just the mega-cap tech names, exactly what long-term investors want to see. The laggards this week are energy, down 1.6%, and utilities, off 1.8%. Real estate is also slightly negative. The energy weakness is interesting given the geopolitical tensions in the Middle East, but it suggests traders are betting on a de-escalation. The Iran-Oman talks about reopening the Strait of Hormuz are in their final stages, and that's keeping a lid on oil prices. On the macro front, the labor market continues to show resilience. July layoffs hit their lowest level in 2 years, down 46% from a year ago. Jobless claims ticked up slightly, but remain in a healthy range. The big event is Friday's jobs report, with economists expecting 83,000 new jobs and the unemployment rate holding at 4.2%. A soft number could actually be good news for stocks, as it would reduce the odds of a Fed rate hike. Speaking of the Fed, there's a fascinating dynamic playing out. Fed Chair Kevin Warsh has a much friendlier relationship with the White House than his predecessor, and he's floated the idea of fewer policy meetings. Meanwhile, Fed Governor Lisa Cook says she's prepared to act on a rate hike if inflation doesn't ease. The market is pricing in roughly a 50-50 chance of a hike by September, and that uncertainty is keeping some investors on edge. Oil prices are another wild card. Crude rallied today after Iran published a restrictive draft plan for shipping through the Strait of Hormuz, but a potential Iran-Oman deal could reopen the waterway. Europe's gas stocks are at record lows, which is reviving memories of the 2022 energy crisis. For long-term investors, this is a reminder that energy security is becoming a structural theme, not just a cyclical one. In terms of volume, Nvidia remains the most traded stock, followed by SpaceX, which is now public and seeing massive interest. Intel, UiPath, and SoundHound AI round out the top 5. The volume in SpaceX is particularly notable given the lockup expiration. Over 900 million shares became tradable today, more than doubling the float. The fact that the stock actually rose despite that overhang is a bullish signal. One more thing worth flagging, the value versus growth dynamic. Value stocks are beating growth by the widest margin since 2022, the last major bear market. But here's the twist. We're in a bull market. That's a rare combination, and it suggests the market is pricing in